Hey everyone, welcome back. We're usually up to our eyeballs in earnings calls, but today we're taking a little detour to talk about some breaking news that kind of really caught our eye, and it's a big one.
Yeah, what's got us kind of switching gears here is this report from the U.S. Treasury Department
Yeah.
about home insurance costs. And, well, it's not exactly sunshine and rainbows.
You got that right. We're talking about home insurance costs going through the roof, and the culprit, climate change. It's a connection we've all heard about, but now it's hitting home, literally, in a way that's kind of hard to ignore.
What's really interesting here is that it's not just like, industry gossip, right? This
Yeah.
is the Treasury Department saying, hey, this is a problem. Like, really saying it. This is a big problem.
So before we dive into the weeds here, let's set the table. What's the headline? What's got the Treasury so riled up?
The core finding is that home insurance costs are going up, like way up. And in some cases, coverage is even, getting harder to find. And it's all tied to this, increasing frequency and severity of climate-related events.
It's one thing to hear about climate change, in the abstract,
Yeah.
but when it starts messing with something as fundamental as home insurance, it really kind of slaps you in the face that this isn't some, far off threat.
Oh, absolutely. We're talking about wildfires just, tearing through entire regions, hurricanes getting more and more intense, and floods just devastating whole communities. And these events are not just, one-offs anymore. They're becoming more frequent and way more expensive.
And the insurance industry is feeling the pressure, right? They're the ones shelling out these massive claims, and those costs eventually, they come back to us, the homeowners.
Think of it this way. Imagine a coastal town, gets slammed by a major hurricane, damage everywhere, houses destroyed, and the insurance company's got to foot the bill for all that rebuilding.
Mhm.
Now, multiply that by, all these extreme weather events we keep seeing, more and more of them.
It's like a perfect storm, no pun intended.
Yeah.
More disasters, bigger payouts, and in the end, higher premiums for everyone.
Right. And it's not just the damage from the events themselves. There's another layer to this, the reinsurance market.
Now, I know some of our listeners might not be familiar with reinsurance. Could you give us a quick explainer on that?
Sure, sure. Reinsurance is basically insurance for insurance companies, kind of like a safety net when, a big disaster hits and an insurance company has to pay out a ton of money. They turn to these reinsurers to help them cover the costs.
So, if climate change is causing more frequent and severe disasters, that means reinsurers are facing bigger payouts too, right?
Exactly. And just like any business, when their costs go up, they gotta raise their prices. So reinsurers increase their premiums, and that gets passed down to the insurance companies. And, well, you know where this goes, to homeowners like you and me.
It's a chain reaction, and unfortunately one that's hitting our wallets pretty hard.
Yeah.
But I think what's really fascinating here is that it goes way beyond just you and me, right? Individual homeowners. We're talking about potential impacts on the entire economy.
You're absolutely right. This is a system-wide problem with consequences we can't even imagine yet. Think about the real estate market, for example. What happens when insurance in certain areas gets so expensive that nobody can afford it?
Well, you got to imagine property values are going to start taking a hit, especially in high-risk areas. Who's going to buy a house if they can't even afford to insure it?
Exactly. And this could lead to what some are calling climate ghettos, right?
Yeah.
Areas where only the wealthy can afford to live because they're the only ones who can handle these crazy insurance premiums.
That's a pretty sobering thought. It's not just about individuals struggling to pay their bills. It's
Yeah.
about whole communities potentially being reshaped by this whole thing.
And it's not just about economics either. This has big implications for social equity. Lower income communities are often the most vulnerable to climate change, right? And they're also the least equipped to handle rise in insurance costs. So this could make existing inequalities even worse and create a whole bunch of new challenges.
It's a messy situation with no easy answers. But before we get into potential solutions, there's another piece of this puzzle we got to look at. What happens if the insurance companies themselves start to, buckle under the weight of these massive payouts?
Now, that's a question that keeps a lot of economists up at night. We're talking about the stability of the whole financial system here. If insurance companies, which are, a cornerstone of the economy, start to falter, the ripple effects could be enormous.
It's almost like a domino effect, right? One
Yes.
piece falls and the whole system starts to wobble.
It's not a perfect analogy, but yeah, you get the idea. Remember the 2008 financial crisis? Started with problems in the housing market, but those problems spread to other parts of the economy, like wildfire, and eventually triggered, a global meltdown.
So you're saying this home insurance crisis could be a canary in the coal mine
Yeah.
for something much bigger.
It's a possibility we can't ignore. That's why this Treasury Department report is so significant. It's a wake-up call, a warning that climate change isn't just an environmental problem. It's economic, it's social, and potentially a threat to our entire financial system.
Wow. Okay. So we've covered a lot of ground here, and it's a lot of process. But we need to understand the whole problem before we can even start talking about solutions.
I'm with you there. We've laid out the challenges. Climate change is driving up home insurance costs, leading to a whole bunch of potential problems that could affect everything from real estate to social equity to the stability of the financial system.
Okay, so before we get into what we can do about all this, let's take a quick break from all the doom and gloom and have a little fun. Time for our This Is Not Financial Advice segment, where we come up with some outrageous yet plausible trade ideas inspired by the news.
Don't forget, folks, this is all purely hypothetical, just for fun. Don't take this as actual financial advice.
Right. Just exploring some ideas here, not giving any investment recommendations.
Okay.
With that disclaimer out of the way, hit me with your wildest trade idea based on this home insurance and climate change situation.
All right, well, let's kind of put on our investor in chaos hats for a second and try to see the opportunity amidst all this.
I like where you're going this, turning lemons into lemonade. Or, in this case, turning rising sea levels into profits. I'm listening.
Exactly. So, just remember, this is all hypothetical, but given what we've been talking about, one idea that pops up is what's called a pairs trade.
A pairs trade. That sounds intriguing, but I got to admit, I'm not exactly a Wall Street guru. Could you break that down for me and for our listeners who might not know about that strategy?
Of course. A pairs trade is basically you're betting on two companies or sectors that you think are going to move in opposite directions. You're playing one side against the other, hoping to profit from how they perform relative to each other.
Okay, so that makes sense. So who are our contenders here? Who's going up and who's going down in this climate-fueled showdown?
Well, on one side of the ring, you got regional banks. Think of the banks that have a lot of loans tied up in real estate, especially in areas that are vulnerable to these climate impacts.
I see where you're going with this.
Hmm.
So as insurance costs go up, property values might drop. Those banks could be looking at a whole lot of mortgage defaults. Not exactly good for the old bottom line.
Bingo. So in this pairs trade, we'd be betting against those regional banks, or as they say in the biz, shorting them. We're basically saying we think their stock prices are gonna tank.
All right, so that's one side of the bet. Who's our champion on the other side? Who stands to gain from this whole climate risk situation?
On the flip side, we'd be looking at reinsurance companies. Remember, they're the ones that insure the insurers. As climate risk keeps growing, those premiums are likely to keep climbing too.
Makes sense. Makes sense. If insurance companies are paying out more for claims, they need more reinsurance. That drives up demand and, of course, the price.
Exactly. So while the regional banks are taking a hit, reinsurance companies could be seeing a nice little profit boost. In our pairs trade, we'd be going long on a reinsurance company, betting their stock price will go up.
Okay, I'm starting to get the picture. But let's get down to brass tacks. If we were actually going to place this bet, hypothetically, of course, how would we go about it?
One way to play it is through ETFs, exchange-traded funds. Think of them like baskets of stocks that track a specific index or sector. For regional banks, there's the KRE ETF. And for reinsurance, you could look at something like R&R, which tracks Renaissance Holdings, big player in the reinsurance space.
Okay, so we're shorting KRE and going long on R&R. Sounds straightforward enough. But how do we know when to jump in, when to get out? What are our entry and exit points?
That's where it gets a little technical, but we can keep it simple. Let's say our entry trigger is a combo of factors. We want to see KRE, that regional bank ETF, break below its 200-day moving average. That's a sign that things might be heading south.
So we're looking for confirmation that the market's starting to price in those climate risks for regional banks. Makes sense. What about R&R?
For R&R, we want to see it break above its 52-week high. That suggests an uptrend is in the works and that investors are feeling good about reinsurance companies.
So we're looking for both sides of our thesis to be playing out before we
Yeah.
commit. Smart move. What about our exit strategy? When do we cash in?
Good rule of thumb is to have a profit target and a stop loss level. Let's say we aim to take profits on a 10% gain on R&R or a 5% loss on KRE, whichever comes first. Let the winners run and cut those losses short.
Sounds like a solid approach,
Yeah.
but no trade is risk-free, right? What are some potential roadblocks we should be looking out for?
You're absolutely right. Always got to watch out for the unexpected. For one, a general economic downturn could impact both regional banks and reinsurance companies, regardless of climate change.
True. A recession could throw a wrench in the whole thing. What else?
Well, we also got to think about the government stepping in. What if they decide to stabilize the housing market or offer help to homeowners who are struggling?
Right. That could soften the blow for regional banks and maybe mess with our trade a little. Anything else?
One more thing to keep in mind is the speed of adaptation. If communities or even individual homeowners start really taking steps to reduce their climate risk, well, that could throw our calculations off too.
All good points. So this trade idea is far from a guaranteed win. A lot of variables at play, but it's definitely a thought-provoking way to look at how climate change might create opportunities as well as challenges.
Exactly. And that's what we're trying to do here. Get folks thinking about the bigger picture, the implications of all of this, and how things might play out in ways we don't even expect.
Well, I'm definitely intrigued, and I'm sure our listeners are too. It's been a wild ride so far, from the reality check of those rising insurance costs to this rather adventurous trade idea. But before we get carried away, let's take a step back and recap what we've learned today.
Sounds good to me. We started with that shocking report from the Treasury Department showing the clear link between climate change and the skyrocketing cost of home insurance.
And we dug into how this issue is way bigger than just individual homeowners trying to make ends meet.
It's about the potential for climate-driven changes in real estate, the fact that it can make social inequalities worse, even the stability of the financial system. It's a tangled web of risks and challenges.
What really got to me is this idea of insurance as a kind of warning sign, like a canary in a coal mine, telling us that the economic and social consequences of climate change are already happening.
And while it might seem overwhelming, it's important to remember we're not helpless. There are things we can do, both as individuals and as a society, things we can do to lower those risks and build a more resilient future.
Right. It's not all doom and gloom. There's still time to act, to make a difference. But before we get into that, any final thoughts for our listeners as we wrap up part 2 of this deep dive?
I think the big takeaway is that climate change isn't just an environmental thing. It's economic, it's about social justice, and it ultimately affects every single one of us. We need to pay attention to these trends, understand what they mean, and start talking about real solutions.
Couldn't have said it better myself. We can't just ignore this. This is a conversation that needs to keep going. So to our listeners, stay informed, stay engaged, and keep those critical thinking caps on. Because as we've seen today, sometimes the toughest problems can lead to the most innovative solutions. Okay, so we've talked about the problem, explored some, let's say, creative investment angles, and now it's time to shift gears a bit. Talk about solutions, because as daunting as this whole thing might seem, we're not completely powerless, right? Right, exactly. There's still time to act. And the more we understand these trends, the better equipped we'll be to navigate the challenges and, yeah, maybe even some opportunities that come up along the way. So let's start with the individual level. What can homeowners do to, protect themselves, their homes, their wallets, in the face of these rising risks and insurance costs?
Well, there are a few practical things people can do. Fortify your home against specific threats like, wildfires, floods, things like that. That can make a big difference. Think fire-resistant roofing, elevating those important utilities, or even reinforcing your foundation to withstand flooding.
Those are all good points. And I imagine even simple stuff like clearing brush around your property, creating a defensible space in those fire-prone areas that could help too?
Oh, absolutely. And don't underestimate community action, working together with your neighbors to put these mitigation measures in place that can, boost the impact and maybe even lead to lower insurance premiums for everybody.
Yeah, that's a great point. There's strength in numbers. But let's be real, not everyone can afford to, retrofit their homes or pick up and move to a safer place. What about the folks who are kind of stuck in high-risk areas with, not a lot of options?
That's where policy solutions come in, big time. We need governments to step up, incentivize climate adaptation on a much larger scale. Think updated building codes, so new construction is more resilient, investing in flood control, infrastructure, creating financial assistance programs to help homeowners in those vulnerable areas so they can make those necessary upgrades.
Those are all great ideas,
Mm.
but it seems like those kind of solutions, they need a lot of political will and, of course, funding. And let's be honest, those can be kind of hard to come by these days.
You're not wrong. There's always pushback, especially when it comes to spending money on what some folks might see as, future problems. But this isn't a future problem. It's happening right now. And the longer we wait, the more expensive and disruptive those solutions are going to be.
It's like that old saying, an ounce of prevention is worth a pound of cure, right? We can pay now to lower these risks, or we can pay later, probably a lot more, when those risks turn into full-blown disasters.
Exactly. And it's not just about governments. The insurance industry has a huge role to play here in fostering innovation, creating more sustainable models for the future.
Yeah, I'm glad you brought that up. It seems like the insurance industry gets seen as part of the problem a lot. But they could be a big part of the solution too, right?
Absolutely.
Yeah.
They have so much data expertise when it comes to risk assessment. They could use that to encourage adaptation and resilience. Imagine insurance companies offering discounts to homeowners who take proactive steps to lower their risk, or even developing, new insurance products specifically designed for a changing climate.
That's a really interesting thought. It's about aligning incentives. If homeowners see a financial benefit to making their homes more resilient, they're more likely to do it right.
Mhm.
And if insurance companies can accurately assess and price those risks, they can create a more sustainable business model.
Exactly.
Yeah.
And let's not forget about technology, innovation. There's a lot of potential there to help us understand, predict, manage these climate risks. Think advanced weather modeling, early warning systems, even smart home tech that can help homeowners protect their property.
There's a lot to be optimistic about.
Mm.
It feels like this whole situation is making us rethink how we approach risk,
Yeah.
resilience, even the role of insurance in our lives. It's a challenge for sure, but it's also a chance to build something better, more sustainable.
Couldn't agree more. This
Yeah.
isn't just about surviving climate change. It's about thriving in a world that's always changing. And that takes innovation, adaptation, and yeah, maybe even a little courage when things are uncertain.
Well said. This has been a fascinating and honestly pretty eye-opening deep dive into a topic that's often overlooked but so important. It's clear that the rising cost of home insurance is just one piece of a much bigger puzzle that involves climate change, economic shifts, social equity, and ultimately our collective future.
And while there's no magic bullet, there are steps we can take, both individually and together, to lower these risks and build a stronger future. It's not going to be easy, but it's a challenge we can't ignore.
Absolutely. So to our listeners, we urge you to stay informed, stay engaged, and keep those critical thinking caps on. Because as we've seen today, sometimes the toughest problems can also lead to the most innovative solutions.
Thanks for joining us for this deep dive. Until next time, stay curious. And remember, the future is what we make it.